Zillow reported earnings after the market closed on Tuesday, and I think there was a lot of steps in the right direction for this company. The way that I am looking at Zillow is as an aggregator in the housing market. This is the one company where customers go to the same place to look for a house, whether they're buying, whether they're renting, whether they're looking for a mortgage, whether they're just looking to see how much their neighbor's house is worth. And that could ultimately be an extremely valuable position because you could be connecting buyers with sellers. Now, currently, the business model is to collect advertising fees from realtors who ultimately want to connect with both buyers and sellers. So Zillow is effectively an advertising platform in that respect. But there's a lot of optionality for the business model in the future, especially after a lawsuit last year that said that there was collusion between realtors on the buy side and the selling side. So if the current business model in real estate, which has brokers charging about a 6% fee, with half of that going to the buyer's agent and about half of that going to the seller's agent, if that business model falls apart, who now sits in the middle? Where are you going to go to find homes if it's not to a buyer's agent, if it's not to your local real estate company? It's likely going to be to a company like Zillow. And I think that ultimately is going to be the valuable position to be being the go-to place for consumers, because that's ultimately going to lead supply to come to the market as well. But it's not just about houses, it's about rentals as well. So let's get into some of the numbers and where I see progress, not only the home buying and selling side, but also on the rental side. Because if you own both of those things, then that's how you build an aggregator, which is, I think, what Zillow is trying to do, what they call their housing super app. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go right to the earnings report. And I'm going to start with the report and then get back to the shareholder letter in just a second. Here's the earnings report, and the high level numbers are right here. You can see that revenue was up 9% in the quarter to $474 million. For the full year, down about 1% to $1.9 billion. No major surprises here that there's not massive moves in the market. We've known especially that the house buying and selling market has been a little bit weak, but look at how they're breaking these things out. Residential revenue was up 3% year over year, outperforming both transactions, the decline of 4% in volume and transactions. So the market overall down 4%. Zillow is up 3%. So that tells you that they're taking a little bit of share. They're taking a little bit bigger piece of the pie in that business. But the more important piece is the rentals segment. Rental revenue of $93 million. Now, this is starting to be a big business compared to the $349 million from residential. Not quite on the same scale, but if this growth rate of 37% year over year continues, rental is going to become a massive business for Zillow. And look at this, they are growing 52% in multifamily. So this isn't just people renting homes. This is apartment building owners going, hey, we got to list our apartments on Zillow. So now you have two-sided markets. And a two-sided market is where you have a buyer and a seller on both sides of the market. Zillow sits in the middle. But you have that for not only housing, but also rentals. So that's great. That's a great place to be. Mortgages is another potential growth avenue. $22 million in revenue, increased 22% year over year because they had a huge increase in loan originations. That was up to $487 million. And what Zillow is trying to do is say, we'll be the place to go find you everything related to housing, whether that's a loan, whether that's insurance, moving. We're going to be the platform that you need for housing. So good that they're originating more loans there. On a GAAP basis, the loss was $73 million or 15% of revenue, but adjusted EBITDA, which takes out some of those one-time expenses and then things like stock-based compensation, which is a very real expense, but not a cash expense, that was $69 million or 15% of revenue. Now, this is the shareholder letter, and I want to start with what their growth strategy is, because this puts it in a little bit different context from what I have been talking about. But they say there's 5 pillars for scale growth for Zillow: touring, financing, seller solutions, enhancing our partner network, and integrating our services. So let's go through a few of those. Touring is just simply, I find a home on Zillow, I want to go look at it. What does that look like? And they have a product called Showing Time that they acquired, where you can connect with the seller or the seller's agent and actually book that experience. Much better than playing phone tag. If you've ever done that, trying to buy a home, trying to figure out when you can go, when the homeowner isn't going to be there, when it's going to be staged properly. It can be a really complicated process. So Showing Time does this kind of thing for their premier agent partners. Financing, again, this is something that Zillow talks about all the time. Approximately 40% of all home buyers start their journey saying, how much can we actually borrow to buy a house? We're starting with the mortgage side. 80% of those buyers don't have an agent yet. So right now, as the business model is making money from agents advertising on their platform, if you're top of the funnel is people looking for mortgages who then ultimately are going to need agents, that's a good position for Zillow to be in, trying to monetize the current business model. And then seller solutions is basically Zillow's core business. This is the advertising solutions, but they've also made some acquisitions that allows you to understand your deal flow a little bit better if you are a seller's agent. So they're really ingraining themselves more in the process for not only home buyers, but also agents as well. Partners, I think, is more of the same. Follow Up Boss is the tool that I was talking about. This is for premier agents and where you can understand a little bit better about it's basically like a CRM tool for real estate agents, and then integrating services. And they're doing that in what they called their 40 enhanced markets. But this is what I like to look at each quarter is, what are the trends for each of these businesses? Residential revenue is down a little bit. And that's something you would expect, not only the seasonality in winter months and sales kind of going down in that fourth quarter, but also this is a pretty weak housing market from a volume perspective. And remember, housing businesses like Zillow, like real estate agents, are compensated on transaction volume. They don't just want to see valuations go up. They actually have an incentive to have more volume. And so the fact that volume is down, and down pretty significantly from the zero interest rate days during the pandemic, that means that a business like Zillow is going to suffer. So that's why we see some of these downward trends. But like I said, year over year up 3%. So there's a little bit of positive news there for Zillow, but you get back to a little bit more of a normal market, and maybe these growth numbers would be even better. From a rental side, I think this is what I have been most impressed with over the last couple of years. With Zillow is really focusing on the rental business. So you can see $93 million in revenue, a huge jump from $68 million, and the number of units is climbing as well. Again, you see some of that seasonality in the business. Mortgages, this is a business that Zillow has been trying to grow for quite a while, starting to move in the right direction, but it's not a very big business. And it looks like what they're really moving towards is just originating loan volume. So that's where you're seeing steps up in originating loan volume. And we'll see if that's the kind of thing that continues to grow over time. And again, here you have seasonality affecting both the net loss and adjusted EBITDA for the business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So I would say this wasn't the most exciting quarter for Zillow because we don't have a booming housing market. We don't have low interest rates. We don't have agents spending money like crazy trying to attract customers. What you are seeing is the long-term vision for Zillow really starting to solidify, and they're starting to gain a little bit of market share. They're obviously a go-to place. If you're looking for a home, that becomes a place for sellers as well, whether that's through agents or directly working with sellers. So that's kind of the core business. But then the way to become the housing super app, as they call it, or the aggregator for all housing, is to now move into rentals. We're seeing a lot of progress on the rental side, and then also to mortgages. And then you can add all kinds of other services on top of that once you become the go-to one-stop shop for housing. That is progress that we're seeing in the fourth quarter. There's a lot more work to be done, but keep in mind that this is a business in an industry that moves extremely slowly. We're not going to see the housing industry fundamentally change over the course of a couple of years. It's going to take decades. So that is the opportunity ahead for Zillow. It's also the challenge for investors is you've got to be patient with this one because the upside, I think, is at least 10x from here, but it's going to take a very long time to get there. So progress on the strategy side, progress on growing market, progress on growing revenue, taking market share. I want to see improvements on the bottom line. I want to see companies like Zillow stop diluting themselves with so much stock-based compensation. But overall, I think it was a solid quarter. It seemed like the market had a pretty positive reaction. But generally, I liked what I saw from Zillow. What did you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.